Alright, ladies and gentlemen, welcome back to the channel. This is the S&P 500 for the day. It was pretty flat. Nothing too crazy was actually happening until the last couple hours of trading today, and then you fell off a cliff, right? Essentially, we were trading around 411 on the SPY for a majority of the day until the last couple of hours, and then we ultimately closed about 401.43 on the S&P 500. So what happened and why did the market sell off so much? We had some news out of ECB, that is the European Central Bank, essentially the Fed Jerome Powell of Europe. They did come out, make some statements, had some bad things to say about inflation and raising rates, but also a lot of this selling is probably due to the major catalyst that we have tomorrow. So let's get into this information. If you guys find value out of this video, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in, and now let's get into it. So like I said, it was a pretty chill day in the markets until the last couple hours of trading. Pretty much went downhill. Like over half the day was pretty neutral, just a little bit back and forth, nothing too crazy, and then things started to hit the fan, for lack of a better word. Now let's talk about what happened today. So European Central Bank confirms July rate hike plans, raises inflation projections significantly. So that's obviously not a good thing. And it says the annual consumer price inflation across the 19-member euro area hit a new fresh record high of 8.1% in May. Following its latest monetary policy meeting, the governing council announced it intends to raise its key interest rates by 25 basis points at its July meeting. Policymakers face the challenge of reining in inflation without compounding the economic slowdown resulting from the war in Ukraine and the associated sanctions. And it does go on to say that, you know, they're committed to a 2% medium-term target, and that's obviously for inflation. And we're far off of that. Just pretty much everywhere we're far off of that. And you also see that the euro is strengthening. So, you know, that's not necessarily a great thing for Europe, and that's obviously showing that there is some problems over in Europe. And I think overall this is just not good, right? Because the markets are trying to figure out, like, where do we value stocks? What's an appropriate valuation? Is it higher? Is it lower than where we're currently at? Really, nobody knows. And when you're in that kind of market that, you know, essentially doesn't know, you can have a lot of back and forth, big volatile swings, because people are trying to figure it out on a daily basis with any new headlines we get. And that's just a recipe for volatility. Now, that definitely did not help, and that's probably, you know, one of the things that made us very, very bearish for the day. But on top of that, you do have our CPI report, which comes out tomorrow. Core inflation rate year over year for May comes out 7:30 a.m. in the morning tomorrow. Inflation rate year over year comes out 7:30 in the morning as well. And the Michigan Consumer Sentiment Survey comes out at 9 a.m. tomorrow as well. Now with CPI, I've heard and seen people talk about the CPI was leaked, and it's going to be around 8.9%. I don't know where that came from. I cannot confirm or deny that validity, but that's what I heard. Now, the inflation rate, just straight up CPI, month over month, expected to come in at about 0.7%, and then the inflation rate year over year expected to come in at about 8.3%. So if you came in much higher than that, that's going to be a big problem. And we did, I believe it was the White House came out today and said that expect inflation to be higher because the price of gas is up like 9% month over month. So I think that's going to negatively obviously affect the inflation rate. The core inflation rate is going to be pretty important as well, probably more important. We're expecting that to actually go up a little bit to 6.2% after being well, actually go down a little bit to about 5.9% after being at 6.2%. So you know, CPI is going to be very important because really where we're at in the markets right now, you know, besides what I said, you know, people don't know how to value stocks because different headlines, you know, can change the total valuation, right? Depending on what the Fed wants to do, depending on what inflation does, that changes the valuations of these actual companies in a substantial way. So you not only have that, but you also have the global economy that is slowing down, whereas the global economy's interest rates are very, very low. Like, the last thing you want is to head into a recession with very, very low federal funds rates, especially globally, and not be able to do anything about it. That's like Europe right now. They're heading into a recession and their rates are at zero still. Like, there's virtually no way to accommodate the market. So what they're going to have to do, what we're going to have to do, is continue to raise even though we're heading into this recession, and it's going to make it that much worse. And if the Fed don't U-turn at the right time, then it's not going to be so pretty. At the same time, it's like, how high is inflation going to stay and how long is it going to last? Because that's obviously really bad for corporate earnings when you're talking about down the line. That's why a lot of high growth stocks, a lot of your long duration growth stocks have gotten beaten into the ground, because if inflation stays high, then these earnings are not going to be worth as much in the future. So I think that's definitely negatively weighing on the markets today. And if we do take a look at the S&P 500, you're still about $21 off of the low that we seen back here May 20th, not too long ago. So this might have been the bear market bounce, the bear market rally, and we might head down to these lower levels. If CPI is really bad, then it's a possibility we get one of these big candles. That's a possibility, and I don't want to have anyone with the wrong expectations. Certainly could happen. What would that move down look like? If we went from today's price to 390 tomorrow, that would be a move down of about 2.65%. That is very possible. If we went down to 385 tomorrow, that would be a move down of about 4%. That in this marketplace, you wouldn't think that is likely, but yeah, where we're currently at, it definitely could happen, especially when you're talking about CPI. If CPI does not come down in a major way, the markets are going to freak out. And if we do fall, then you definitely want to have some level of hedges, right? We're probably not going to bounce back. We're not going to bounce back to these all-time highs for a decent amount of time, probably 6 to 24 months, in my personal opinion. No, I don't think this is going to be a lost decade. I don't think we're never going back to all-time highs, but I think it could be a little while, essentially, until either earnings outpace inflation, which I highly doubt that, and the economy avoids a recession, or the Fed does U-turn. Now, the price of oil, the price of food, these are things that are pushing us into recession. So no matter what the Fed does right now, no matter what inflation looks like, we're still going to go into a recession. So right now, you want to be ultra careful picking companies that can survive through a possible recession. Now, I don't know how long it would last. I don't know how bad it would get, but really the price of oil is going to dictate those exact things. So that's really what I'm watching as of right now. It doesn't look like the war in Ukraine is slowing down anytime soon, and that's definitely a negative thing for equity markets overall, and that's going to be a negative thing for SoFi stock as well. And I imagine tomorrow, off of CPI, that's going to move the bond market, which we have seen the bond market pretty much continuously heading up in pretty decent size increments for the bond market. Now we're at 3.046% on the 10-year treasury yield, and that's making the cost to borrow essentially super expensive for the overall markets. For any kind of loan, that borrowing rate is a lot higher now than it was. So you're definitely seeing some degree of demand destruction, and we just talked about that headline in the last video, essentially where real estate demand is at a 22-year low for new mortgages. That's a pretty impressive feat in a very short amount of time. We pretty much completely killed the real estate market, and it looks like those prices are going to be coming down. Could be some sweet deals. Let me know if you guys want some real estate videos here on the channel. I will definitely provide that to you guys. I do own rental properties, and that's what my main source of income is. So love to share that with you guys if you guys are interested. But nonetheless, let's talk about SoFi stock, what is going on today, because we were down over 8%. And if we look at the option activity, this is the thing that's just easy to pick on because it's so obvious here. Look at the large put orders that are coming through for June 17th. About a almost $4 million put position for the $10 strike that's coming through. When you see this kind of option activity, you can't rally. right? Because it's pushing the stock down with all of this put activity. Same thing like a gamma squeeze works, right? When a lot of people buy a lot of calls, pushes the stock up. When a lot of people buy a lot of puts, it pushes the stock down. So that's the easiest way to actually put it, and that's likely what is actually happening right now. That's what's controlling this stock. Now, the short interest of free float is sitting at 16.86%, 122.67 million shares that are sold short. Cost bar max at about 5.1%, 100% utilization. Days to cover at 3.77. Free float out on loan at 26.43%, down about 6.5% over the last 7 days. Shares out on loan also down roughly about 10 million shares or so. So looking kind of bullish here, but I think the option activity is definitely weighing a lot more on SoFi stock as of right now. I really don't think there's a lot of people that are long-term investors that are selling this stock, that really have been selling this stock under $10. Like, I don't see that. I don't see anyone talking about selling SoFi stock. It just doesn't make sense to be selling a stock like SoFi, such a great business for the long term. At these prices, maybe. Let me know if you sold SoFi down below in the comment section, but I really don't see it. So I think inevitably, when we do flip and the situation looks more bullish than not, SoFi will rally because of these factors that we're talking about here in this video. Now, the stock is currently trading at about $6.11 per share. Like I said, down about 8.26% on the day. We'll see if we come down. Watch the $5 level. That's about a $1 drop. From here, that would be what, about a 20% drop, give or take, from where we are currently at. It's possible. I don't necessarily expect it, though. Depending on what CPI does, that will definitely have a bigger impact than not on SoFi stock, because that'll also move the bond yields, which has a big impact on SoFi's overall business model. Now, the RSI is trading at 39.37, so extremely oversold, getting way down there, so not so good there. And the MACD actually just went bearish as of today, which is quite surprising overall. It's been pretty flat besides the day we've seen today. Anything can happen, though. We could bounce back up tomorrow. If we do, watch that 50-day moving average. That is currently sitting at $9.11 per share, as well as the 100-day moving average, currently sitting at $7.16 per share. If we can break out above 7, then you're probably going to 9. But we're going to need to see a really good CPI report to actually see a move like that one. So that is basically going to be it for this video. That's what you guys need to know. Not too much else to actually add. Overall, the economy's in a shitstorm. ECB, China, America, Russia, just everywhere is in a shitstorm. And can your stock weather the potential carnage? And I do think SoFi is in a very good position and will do very well regardless of what happens. As you guys do know, Anthony Noto continues to buy more shares. Look at that, another 17,000 shares bought as of yesterday for $112.42 So I mean, this is the biggest sign you could ever ask for. Like, you don't get updates on the companies you invest in every single day, but you have Anthony Noto buying almost every single day, and that is a huge sign that the business is doing good. So that is it. Thank you guys for watching. Get your free stocks with Webull, Moomoo, and Public down below in the description. You guys enjoy the rest of your day, and I will see you in the next one.